Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, September 13, 2012. Thank you all for tuning in. There's a big day today. This is a big day today, I should say. You do have the Federal Reserve, the Central Bank of the United States, going to supposedly make their interest rate decision, which we know will be kept the same, 0% on the Fed funds rate, so that's 0% money lending to the four large big banks. This rate has been held this way since December 2008, so I don't see any real change there. But many economists, many investors are now expecting the Federal Reserve to come out with QE-3 as promised by Bernanke in his Jackson Hole statement. So we'll see exactly what comes out of Bernanke today. We'll know a little bit more at 12 o'clock. That is when we are supposed to get the interest rate statement. Also, we'll hear if there's a QE3 at that time. Then at 2:15 this afternoon, the chairman will hold a press conference, and we'll see how the market reacts to that. So, nonetheless, right now the market is down around 2.5 to 2.75 points on the S&P 500 E-mini futures. Not a big deal. Really, the market is just going to be in a holding pattern here for the most part. You do have the U.S. dollar index down as well. Down about 11 cents at the moment, so dollar is lower. The dollar has been absolutely annihilated on the daily chart. You can take a look here. You can see really this thing is down over $4, almost $5 in since the 24th of July. So dollar down. You know, the stock market has been up, and that's really the bottom line. But once again, it really just comes down to if the dollar sells off, the market should inflate higher. The euro should go higher, and really that's really what it's coming down to. It's surprising that Europe is rallying so much on a stronger euro, because a stronger euro actually weakens European exports. But that's the way the market works these days. It just really cares about the world's reserve currency. As long as the dollar goes lower, the markets inflate, and that's basically what it comes down to. Sometimes it's not 100% correlation, but I have to tell you it's the best correlation I've ever seen in my lifetime. So again, the dollar down, market up, and that's really the bottom line. So you have the dollar down about 11 cents at the moment, and we'll see how it plays out at 12 o'clock. That's going to be the important hour going forward. Let's take a look at gold and silver. Let's take a look here at gold and silver. Gold today, trading up a little bit now. Just caught a bid. It was flat a few minutes ago. It's up about $4 now, right to around the $1,737 level. So the GLD, let's take a look at that. It's a good proxy. You're seeing that uptick a little bit to around the 168.30. It closed at yesterday at 167.92. So it's up a little bit there. You can see it's up about 40 cents, and that relates to around 4 points in the gold market. So again, we'll watch this closely. If there is a QE today, if there is a QE and it's a big one, watch gold take off. Gold will blast again, even though it's overbought at the moment. It can blast higher on any news that a QE is being implemented. So again, everybody's going to be watching that. If there is no QE, or a QE is postponed, we could see a sell-off in gold today. So that's where we stand right now with gold. The same case could be made for silver and oil. So you have to watch that, and that's all going to come down to the dollar. If the dollar strengthens, there's no QE, the dollar should strengthen. Oil and gold and silver should come down. If there is a QE and the dollar weakens, oil, gold, and silver will all go up. That's kind of how it works, and the stock market will follow that same scenario. So again, gold is up just a little bit ahead of the Fed announcement. Wonder if it's telling us something. But either way, most economists, most traders, most investors are expecting a quantitative easing. I even saw on Bloomberg they're expecting it 100%. So I thought that was a pretty bold statement, but it was on Bloomberg that they are expecting a QE 100%. So again, we'll have to see how the Fed does this. This will be the first time the Federal Reserve, if they did a QE right now, would do it with markets at a high. Normally they do it with the market at a low. This way they could get a lot of short covering. There's not a lot of shorts in this market. So we wonder how high they could push this thing. But hey, you never know how big that quantitative easing is, or how much free money they're going to throw into the system. That's really basically what it comes down to. Let's take a look at oil. This morning you have light sweet crude trading up 43 cents to $97.46 a barrel. Let's take a look at the USO. Yeah, got a nice little pop there on the USO, trading at 36.25, closed at 36.04. So again, dollar weaker, oil and gold are higher, and that's really the bottom line. Gasoline is going to be the real culprit here. Gasoline had a nice sell-off yesterday. Looks a little bit on the weaker side this morning, basically trading right where it closed yesterday at $60.54. But that was a nice little sell-off in gasoline yesterday. If there's a QE, expect gasoline to go higher. The UGA could trade easily to $63. I would not rule it out at all. Okay, so again, gasoline is nearing its 2008 top. And really, if there's more quantitative easing, it should exceed that. All right, let's take a look at some stocks in the news today. There's not a whole lot going on before the opening bell today. But what we do have is you have 8:30 in the morning, a couple minutes from now, you'll have the weekly jobless claims. We'll see. I don't think it's going to be a big event today. Really, the big event is going to be the Federal Reserve. The only stock I'm seeing here moving really big this morning is Apple. Apple's getting a pretty good little pop, but I got to be honest, I'm not all that impressed with Apple's price action. I know all the talking heads on TV are telling you and pumping you up on how great this iPhone 5 is. It's a game changer, and it does all of these things. The stock's not telling me that. So, be careful with Apple here, all of you Apple lovers out there that want to. You'll get a better price opportunity, I think, in the future. Let's take a look at DSW. This is the shoe outlet, the shoe store. They offered a special dividend, so the stock's getting a big pump today. Now, again, when they pay that dividend out, the stock will usually drop by that. I believe it's a $2 dividend, so a special dividend is being offered. Stock's getting a big pop today, so be careful when chasing this one a little bit. It's still a strong stock, and it looks fine. It's coming off of a base, so maybe it even goes a little bit higher. I wouldn't rule out a move to $70 ultimately, but I have a hard time seeing it get much past that. I would not sell it short or fade it just on the special dividend news, but again, when they pay out the dividend, the stock will decline generally by that amount. So nice little pop in DSW, but you really can't make too much out of this today. It looks like Citigroup came out and upgraded a bunch of retailers today. You could check that news out for yourself. I don't see really the price action in there to make much of it. So again, we'll see how this all plays out. Let's switch back over to the futures, and like I said, there really just wasn't a lot of stocks gapping up or down, but we do have jobless claims and PPI coming out. We'll see how the market reacts here. So far, you see a little upticking going on in the S&P futures here, the E-minis, but we'll see how the number comes out. Jobless claims at 382,000 for the week. I guess that's a little bit weaker than expected, but somewhat in line with what it's been recently. It's been fluctuating around 360 to 385, so you're getting a little bit of a bid. Again, the worse the number is, the better it is for the stock market, because it's the more the chances increase that the Fed will do a QE. U.S. Producer Price Index in August up 1.7% versus just 0.3% in July. So that's a higher reading there. I'm not sure, what it really means. I just care about what the stock market does, and right now we're just holding steady. A little bit of upticking though going on in the market. Futures only down about 2 points now. So we'll leave it there for today. Again, it's all about the Fed announcement. That will be at 12 o'clock, and then the Bernanke press conference, which usually lasts for about an hour and a half, will take place at 2:15 this afternoon. Real quickly, yesterday was the German court ruling. They ruled in favor of the Europeans doing that European stability mechanism, bond buying, like the Federal Reserve does. But also the Federal Reserve moved their meeting back to Thursday to make sure that announcement went off without a hitch. So it's going to be really something to see how the central bank of the world, the Federal Reserve, takes today's, does a QE or something like that. Right now, what is many people have penciled in is that the Federal Reserve will extend the 0% Fed funds rate to the large banks until 2015. So they're going to push that out another year maybe. So we'll see how that all plays out. But in any case, it is what it is. Let's see how this market reacts. Again, there's not a lot of stocks moving ahead of this. But afterwards, I think we'll see fireworks at 12 o'clock. So stay tuned, everyone. It's going to be it should be a volatile market once 12 o'clock hits. I will see everybody tomorrow. Thank you all for tuning in, and have a great trading day.